Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, July 22nd, 2015. So Apple reported earnings yesterday after the bell. The stock is taking a hit today, down about 5% or $6.30. I predicted this yesterday in the video that I put out free to everyone out there. You can find it on our blog or on our YouTube channel or on many other websites. I want to show you why I knew that. And it's going to be crystal clear once you see these factors. All right, so number one, let's take a look. You can see Apple again down about $6.34 right now. If we flip over to the daily chart here, let me do that right now. You can see that again, Apple was trading sharply up into earnings into a triple top. Now that's really, it's important, but it's not the only factor here. All right, because in all fairness, we saw Google rip higher into earnings, and then it went even higher on earnings. But again, the triple top is part of the reasoning here, but I want to show you this even more so. So again, notice how if you put a trend line right here, pivot, 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 and you were trading up below. You didn't break out, and that's the key word that I'm going to tell you to remember. Breakout. Apple didn't do it. Google did. Look at this, guys. Take a look at GOOG. All right, what I want to do here is zoom out on the chart. Put a trend line through these pivots, right? Pivot, 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 and all these down here. Notice how going into earnings on this day right here, the day couple days before earnings, it broke out above that trend line. Then when earnings were reported, it shot all the way higher. So it had already broken out above the trend line. All right, if we look at Apple, go back to Apple here, notice how, just like Google, it was trading up into earnings, it had not broken out. So that was a signal. That's an indicator. Another indicator that I think is very important, take a look at the run that Apple had over the last couple years. All right, so going back basically a year, maybe a little over a year here, Apple was trading literally down at $70 a share. So from $70 to $130 before earnings. Now what I want to do is flip over to the Google chart and show you the same thing. All right, what did Google do in that same period? If you look here, all right, so since the same 2-year plus period here, Google was trading in a range. So you see the difference there? So this is just one more thing. One more thing that you have to take into account when you're trying to figure out what's going to make a move. All right, so again, Google trading sideways for 2+ years, from basically mid-2014, 13 to 2015 here. So for 2 years trading sideways. Apple trading up literally almost 100%. So you see how Apple was already up tremendously going into this earnings announcement, while Google had been in a sideways movement, not gaining appreciation for 2+ years. All right, you add that into effect. Also take a look at analysts. All right, analysts generally were neutral on Google, and on the other hand, if you hear what the analysts were saying on Apple going into earnings, whether it was on CNBC or anywhere else, they were unbelievably positive. I mean, think about Carl Icahn. Carl Icahn's been pounding the table on Apple. So there was so much positive sentiment on Apple, yet Apple was the one that hadn't broken out, had been up 100% over the last couple years, okay? I mean, just think about those things that are not good to see, as opposed to Google, which has been stuck sideways for 2 years, no appreciation there, and had broken out prior to earnings. All right, and again, analysts were very bullish on Apple. Analysts on Google were more neutral, if not negative. So again, you always favor the play that if you look at those factors, they're the factors for Google that told you it actually had a good chance to go up versus Apple. Apple did not have that. All right, guys, I think that's very important. Again, I hope you learned something here. This is a great educational video. Look for these factors. Look at charts. They do tell you the truth, as opposed to analysts, which give you the BS, and the media gives you the BS. So, again, focus on the charts and profit for life. All right, come join us here at InTheMoneyStocks.com. New trade alerts been published today, guys. The Research Center for swing traders, and for day traders, the intraday stock chat. If you like options, we have the options alerts. Come join us here at InTheMoneyStocks.com.